Hi everyone, Ole Chernikovsky here, Group Leader of HME Group, Remax West. I'm here with Ken from...
Ken Tucker from Dominion Lending Centers.
Okay. And our goal today is to talk to you about what's really happening on the market. We've had a lot of commentary and we've seen a lot of headlines with respect to interest rates and how they're affecting the market and how it's affecting affordability, and that people are actually running for the hills, it seems, the investors. So I wanted to kind of have a conversation with an expert to find out really what is really happening and how does all these changes truly affect us today and in the upcoming months.
All right. The bad thing is I left my crystal ball at home, so I'll just do the best that I can do without it.
Sounds good. I think, Ken, one thing we learned in years of business is that nobody has a crystal ball. But what we do have is economic fundamentals.
That's very true. Well, and even the actual professionals, the people who are paid to predict what's going to happen, they're wrong majority of the time. So,
well, yeah, that's true. I hope not majority. I think if you're basing our prediction based on facts versus emotions. And I think if you're looking at economic conditions as well as past performances, because past doesn't rule the future, but it does give us hints. Would you agree?
Absolutely.
So then if that's the case, then I think, looking at past 20-year performance of Canadian real estate market, we can have some indication of what to expect when certain conditions happen.
I'd actually stop you right there, because I think one of the challenges is that a lot of people are looking at the last 20 years of real estate only and have seen it only go up and up and up and up and up. Now, the reality is that everything cycles.
Right.
But the more important part is when you look historically going back 100 years, you do realize that on average, about every 10 years, house price double. Even regardless of 70s correction, 80s corrections, 90s correction, regardless of all the different corrections, it still doubles about every 10 years, which is the important thing. Last 10 years have been just up, up, up without much cycles, but it still goes in the right direction.
I think you hit on the right thing. Being in the business 30 years, my perspective is I actually look back as what happened during the 90s market crash, and we look at what happened in the 2001 or 2008 or 2017. I think these are the different factors, and you're correct. If you're looking from a point of general perspective, growth, well, real estate has been one of the most securest investments. Having said that, long term, it's very hard to lose in real estate. Given that, you still have to treat it like a business. Would you agree?
Absolutely. Like I've been in the industry a little bit over 20 years, and I would say the 2008 correction was my big learning point, because it was the major correction that I've actually worked through. So not just lived through, but worked through. And in the moment, I went into historical to look, to research, did all the research to try to take the emotions out of it. But even then, for myself, if I'm being very honest, I was scared. I knew that I should be taking this as an advantage and actually buying up real estate, investing in real estate, but I was scared, like most other people. But I think, with age come a little more wisdom, and this time this is a correction that I'm looking forward to. It's going to create a lot of opportunities. I think a lot of people focuses in the wrong place.
Mm-hmm.
People try to gauge the market, try to interact with the market based on where it is right now, instead of actually doing long-term planning. Real estate is supposed to be very slow growth, which is what it has been traditionally, but because in the last 10 to 20 years there have been such an aggressive growth, people just look on real estate as instant money, which that is a huge problem. It's one of the big problems we've had, why a lot of people are coming in buying with emotions versus buying with logics. It's good to have people like yourself have the experience, can run the numbers for the client, like with my help with the numbers, but more importantly, you know how to analyze those properties, how to bring in the right numbers to make sure that it makes sense.
I'm glad that you said that. It's because it's managing the expectations. And one of the things we talk to you about with our clients is that nobody has a crystal ball. Yes, you know that real estate long term will appreciate and the value will go up. But there will be times during the period cycle that when it may fall down. This is why we always buy for positive cash flow. And because of the positive cash flow, because somebody else is paying off the mortgage, or because you're paying down the mortgage, and because of leverage, in the long term, you're always winning.
I'm gonna get to stick a pin right there because I'm a big believer in there's no always. I've seen a lot of clients buy, not just for positive cash flow, which I do believe in, but they've run the numbers and realized that even with using the amount that you pay the principal down over time, real estate's a pretty good piggy bank just for savings. They're high income earners.
Mm-hmm.
They can actually utilize the income that they have to cover the short cash flow deficiency, and long term they still work out a lot better because, as I said to you before, prices pretty much double every 10 years. They get the capital appreciation, they get the principal pay down, and they have an asset that weathers pretty much any storm. Like even right now, a lot of times people don't focus on the fact that in a good market, rent prices are high. In a bad market, rent prices tend to go up a little more because there's a supply and demand issue. Like a lot of people who normally buy are now out of the market. They have to live somewhere. They now have to rent. They're forced to compete with everyone else. And because of that, a lot of times the cost of rent actually goes up because of supply and demand. So
And that's what we're actually seeing in the last couple of months.
yeah, for sure. And in studying money, it's always talked about you have to have different buckets of investments. For me, I look on real estate the equivalent to a bond. And I know a lot of people look on it, regulators will definitely tell you that, no, it's very risky. When you look on it from the standpoint of you have something that is one of life's needs. Shelter is definitely one of life's needs. So when you're investing in, food, sex, clothing, shelter, it's hard to lose when the demand is higher than the supply. And the reality is that we're in Canada, we have 400,000 new legal immigrants here every year. They have to live somewhere. Not only that they have to live somewhere, when you look on traditionally, immigrants come here usually for a better life. They're coming here, they're going to work hard, we're both immigrants. They're going to work hard, they're going to save, they're going to sacrifice, especially because they came here with a very specific target. They're going to do everything, put away the resources, live within their means, do everything they need to do to make sure that they're going to get that, quote unquote, American dream. And
In this
real
case, the
estate, Canadian dream, right? Which is why I said quote unquote. But a big part of that is real estate.
Yeah.
And given the fact that we have more people coming in than leaving the country, than dying, right? Real estate is always a shortage. We also have to deal with the fact that the millennials are actually getting to that age where they're at, they're closer to their peak earning cycle in their life. Baby boomers are retiring. They're giving a lot of money to their kids, but the millennials are actually at the age right now, they're in their about 40s, and they're going to be, those executive jobs, those top earning jobs, the people who are educated, been in their job for a while and, getting the promotions,
Right.
which means that they're going to have a lot of money to spend. So you have those people, you have immigrants coming in, and the reality is the government is trying right now to have more building like more construction happening, but the reality is that there's a bottleneck at the municipal level. That's a huge problem. The biggest challenge though is still trade. Most people want to do something else apart from getting dirty, picking up a tool, picking up something to construct buildings. If you don't have trade, no matter how much money you want to throw at it, if you don't have the money to do it, you just can't do it.
That's true.
So with the absence of kids going through university, going through apprenticeship, learning, becoming like a trade expert, it's going to be harder to get trades. A lot of the older people are retiring, they've had enough. If they're lucky, their kids will come in it. But for the most part, a lot of those people are exiting the market. We don't have people to.
There is a shortage of skilled labor.
Yeah.
There is labor, but I think one of the things is a lot of my clients who are builders, one thing I'm hearing is there's a shortage. There's a shortage of bodies, but there's also a shortage of skilled labor. And I actually see them moving people or lending people to each other just to catch up on contracts. So you're right, and I think it's one of the things you're seeing is that the housing supply, it takes, given the government policies and the process it takes, it's not something that you can instantly fill. It is going to take time. And then I guess given the economic factors as well as the government policies, the question is, are we enticing people to invest and build new stock, or are we pulling it away? Certainly recently the government policies imply that they're going to be encouraging more construction, and investment from the private sector. We know that government on its own is not the best.
Sorry, did you just say government is incentivizing private sector? Because I think they're kind of doing the opposite. They do have a few programs. CMHC does have a really good program that a lot of people don't know and don't take advantage of. But for the most part, the government is penalizing landlords, investors.
I'm not talking about landlords. I'm talking about, I know there's restrictions.
Right.
What we were talking was about basically building new stock.
Right.
So I think, when you're hearing about policies about, speeding up the processes, removing some of the costs,
Okay.
taking away the adjustment committees and objections, those are good news for being able to build.
They're trying.
Yeah, they are trying, and in all fairness, the best, I think, the moderator is really the economy. The more when there's a demand, high demand, and there's a short supply, whether you like it or not, the private sector steps up and they start building. Why? Because it becomes profitable. Because the rent's going the way they are and they're rising. Yes, at one point it's going to help us, encourage us to build more. Why? Because today you're looking for where can we invest our money.
Well, I don't know. I understand what you're saying. From a logical standpoint, that's what should be happening. One of the big things that I'm hearing, a lot of builders are actually pulling out of the projects that they have right now because of a lot of the government intervention, because a lot of different things that are happening. It's not as favorable for them to build right now, and if they pull back, then it makes the supply less. So
I think when you're talking about the builders, we're talking about, again, I think the best thing is, and this is where we've seen the issue of the news, when we hear the headline that says investors are exiting the market due to the increase in interest rates. So the question then becomes, is it the actual investor that buys for cash flow, or is it the investor that buy and flip? Yes, a buy and flip is an investor, but it's more of a speculation. So I think when we're talking about builders pulling back, we know that right now some are putting projects on hold for construction of residential homes. But at the same time, and for a number of reasons, one is shortage of labor, two because of instability of the market, and they're trying to see where things are. At the same time, what we've been seeing in the last 5 years is more of purpose-built projects starting up for rental properties. So I think when I'm talking to you about the building, I guess maybe this is a great example of what are we talking about, right?
and I think I understand where you're coming from. I guess when I look at it, I look on it from a more global perspective. When I think about our market, small business actually represent the majority of businesses in Canada.
Mm-hmm.
The example you just used is really a reflection on a lot of the big investors doing very big projects, like you said, doing low-income projects coming in. But they really represent a very small percentage of all the investment that comes into the market that's needed to solve a lot of the housing crisis that we have. So the reason why I use the parallel between small businesses, when a lot of people think of business owners and think of businesses, they think the Amazon, the Facebook, the really large companies.
Mm-hmm.
But that's only a very small percentage of business in Canada,
Absolutely.
and the lion's share of business come from small business. And it's very similar when it comes to investors and providing housing, the housing need that we have, the problem that we have. Majority of that solution has to actually come from small investors looking to buy one property here, two properties there, that are going to be able to sprinkle all across the country with a lot of different projects to be able to provide that housing.
Now, given that though, which makes sense, right?
Mhm.
You know, the private investors buying single family homes and turning them into multiple homes, like a duplex or a triplex or like a sixplex, you know, and that's being creative.
Which the government are trying to help where that is concerned.
Yes.
Yeah.
At the same time, I guess, you know, I look at it, there's two parts. You know, there's one part is there's the larger builders, there is the institutional investors. And the nice part about that is when they build, like for instance, like right now we're working on one of our projects which is going to address the young people's needs of affordable rental housing. And you know, so we're hoping to build 5 properties across Ontario during the next 5 years. Well, you know, when we're building them, we're looking to build 200 plus units. So in a way, you know, I can, as a private investor, you know, how long would it take me to buy it individually to fulfill that need?
But that's where I think the focus should be a little different, because you're right. When you have investors that can actually come together, do a project that can actually create 5 buildings over years with hundreds of units, that'll take very long, and there are very few people that fit in that model.
Right.
What is a very quick and easy model to fill, which as I said, the government is trying, is you literally have millions of houses across the country right now, right? Tens of millions of houses, well actually not tens of millions, but millions of houses across the country right now. If those properties are allowed to actually put in a secondary suite, right away you can almost double the housing supply in a very short period of time.
Yeah, the good news about that is, you know, for years, the provinces from federal direction had the intensification requirement. And actually, if you check with the municipalities, a lot of them are under pressure to create all these suites. And yes, there's limitations. We've been dealing with all those problems.
Pressure is one thing, right? The biggest problem we have in Canada is not in my backyard. You know, I want the intensity, I want all these things to happen. I think that people should be able to put in suites and should be able to rent it out, just not in my backyard. Just
Well,
not in my area.
And I think that here's the issue. If tomorrow I want to tear down a building and build a 5-6 unit, there's been that ability for the neighbors to object. If I wanted to take my house and turn it into, you know, create a legal basement unit, you know, there's not much a neighbor can object from that perspective.
They don't even need to. The municipalities are going to get them most of the times.
Well, and in the old days where, let's say we took one where basically it was illegal to have rental units, and they all existed, and you know, there was a way to get around it. And you know, from one side they told us, no, we can't do that, like you can't have it, but yeah, at the same time we're gonna close our eyes up.
Right.
So now that they're actually saying, yes, we can, here's the guidelines. And so I think, when you think about it, there's a huge stock of illegal units that one day will have to be legalized, but until then, it is fulfilling a need.
It is, but I guess it also depends on where you are, right? Like, if you're going out to Peterborough, it depends on the area that you're in. Some municipalities have accepted that this is a problem, they're on board with fixing it, and that's great. The challenge that we've had is that that's not the majority of communities. And the big challenge is on the municipal level. That's where most times you have the bottleneck. The applications come in, people buy it, wanting to do all these different things. The municipality is like, okay, this is how we've always done it. And you're like, well, this is what the province says. And you're like, well, the province made those rules, but we're the ones who have to approve it. If they don't approve it, it really makes no difference what the province says. You can apply, you can try to circumvent. Like I have a property that they have, they're trying to put in, I think 42 units right next door. And the infrastructure is very challenging to be able to allow that to happen. The people in the area complained about it because it's a little bit too much.
In all fairness, we're talking about the difference between a 2-unit and a 42 unit. So that we're talking about a major change.
This is only on 2 acres of property.
I get that, and I think what the nice part is, if providing the government lives up to their promise, they're saying that they're basically going to take away that objection and ability to
But that's
streamline.
where the challenge is, because as much as they would like to say that they're going to take it away, there are some legitimate problems. The infrastructure has to be able to support what you're trying to
Absolutely.
do. And the challenge is that it's one thing when a government says, this is what's going to happen. On the municipal level, the challenge that the municipals have is that they now have to be able to implement it in a sustainable way. And that's why I use that as an example, because it's one thing to say that we're going to push to do that, especially in an election year or something like that. It sounds great. People are like, oh yeah, government's doing something. But what are the rules able to be executed efficiently within a short period of
Well,
time?
I think that is, from what I'm using your example, it sounds like in spirit, they're executing the rules. But at the same time, no matter what rules you're going to create, you can't build something that is not fitted for the space. Yes, it's 2 acres, but if you know that the infrastructure is not there.
I was saying it's only 2 acres, meaning that 2 acres, you need more space to build that many units. I wasn't
Right.
saying from the standpoint of saying, this is tons of space, because 2 acres is nothing as far as
It's
I'm
not,
concerned.
and that's the whole point. So I think sometimes, could that be space, that land be used for better use? Can that be built somewhere else, right? It's not, just because we want to we want to build a 242 units, we can't just build it anywhere. We have limitations and.
This is only 42, not 240.
I
just want
get
to make
that.
sure. And the point that I'm making is that I always try to look at everything from both sides, right? Like I try to take myself out of it and try to look at it from both sides. And I do understand the complexities and the challenges from both sides. If you don't have people who said, okay, we're going to do this and put the time and the money in, then it never happens. If, on the other hand, you have, there are real challenges that have to be overcome. How do you find, a happy medium? And that's
I
where
think
the
that
challenge
the
is.
part is this. It's like what I've learned over the 30 years is that, for every challenge, there is a solution.
Yeah.
Right? There's times when you can't beat your head against a brick wall. It's not going to happen. It's just, well, you could, but the result isn't going to help.
Yeah.
Or, if you understand the rules of the game, if you understand how things work, then you choose wisely and you can still get the results. It's like today, we hear headlines, investors are heading for the hills. The market's crashing, it's unaffordable. And both yourself and myself know that, we've been, I remember buying my first house when it was 16% interest rate.
By the way, I would say that I don't necessarily agree with most things the news say, and that's one thing that I don't agree with. I think when they say that, they're thinking about as you had mentioned before, the speculators who are not real investors, who really understand the market, don't have the faith and trust in our system to be able to outlive the challenges that we have right now. And those people are getting scared and running away. But true investors are actually doubling down. And if you look on every single time when any tragedy, any kind of crisis happen, true investors will come in, they're going to double down, and they're going to actually capitalize on everything that's going on. It's always the speculators that get scared and run out, which they really should, because if you're coming in without fundamentals, without having people like yourself helping them through the process, helping them to be able to weather the storm, to understand what's a good investment, they're going to get burnt, and then that affects the entire market. So we don't want those people who are just throwing down money to try to get in something because the market says that you should right now because there's a hype. You want people who are going to come in with fundamentals, and I think those people are actually doubling down right now, not actually running away.
I can tell you, I would totally agree. It was interesting that when everybody was saying how great the market was, for our investors, yours, I was saying, guys, January to March, April, you know what, if we find the right property, great, but otherwise, we are gonna wait. Because guess what? Did we want to go into bidding war and overpay by 200,000? Well, if the cash flow was there, maybe. But if it didn't, if the numbers didn't make sense, just because if everybody was going crazy, that was not the reason.
Fundamentals,
right?
Always fundamentals.
Now the interesting part is, what you were telling your clients is that wait till June, May, June, July. There's going to be, the market will settle. We'll get our inventory. There's going to be opportunities, and sure enough, we got the extra inventory, market settled, interest rates kicked in, there was more of a price correction, but what's interesting is this, yes, the interest rate became higher, but the rents went up, there's more properties to choose from, so then if that's the case, if I have more properties to choose from, I can get better cash flow now, why would I be exiting the market? Would you?
Absolutely not, and that's the whole point. It's like investors versus speculators, right? They're not just based on their neighbors saying this, their friends saying this, co-workers saying this. They're actually spend the time looking at the properties, going through the fundamentals, and make sure that the fundamentals are sound and it makes sense to do.
And I mean the other part is, you and me been talking about fundamentals. Just for everybody here, what are the fundamentals? Well, we're both RA members, Real Estate Investment Network. We were just at I think we just drank, Friday and Saturday. I don't know how you felt, but I felt like fire hose. I was almost gasping for air by the end because I'm going, wait a second. What was it, from 10 a.m. till basically 6 p.m., no lunch break, no coffee break. I'm going, wait a second.
9:30 actually, because they had the meeting before. 9:30, and I mean it went until a lot later than the scheduled time. But and that was Friday as well. They started and then they went pretty late on Friday. But when you talk about fundamentals, you have to the rule of real estate is location, location, location. If you have good income, right, the property cash flow, there are a few things that when you have these things, regardless of whatever is going on in the market, you have sustainability. And as long as you have that sustainability that can weather whatever storm, you're okay.
So when we talk about sustainability, it sounds like realistically, when you say location, 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 a lot of people try to think of position on a street, like an area or a streetwise. And realistically, when investors talk about location, they talk about it from a broader perspective. If you're looking at location from a point of GDP, what is the gross domestic product? What is the economical growth in that area? You look at transportation. How is that affecting the area? You look at basically employment or unemployment in the area. Is there companies and local businesses that can sustain the employment and incomes for the area, or will people be moving out? We talk about other factors like government policies. We just spent a whole bunch in in some ways you have one view because you kind of say, well, the government restricts them. I'm saying, I get that. We're both dealing in the same market. I take a little bit more of a positive approach because I'm saying, I get that, and you learn to get around that. And I think this is where, a true investors, you look for solutions. You don't just listen to and saying, oh, doesn't work, that doesn't work. You look for ways on how to solve situations because, for instance, interest, for, I guess, as an example, well, interest rates went up. Did that crash the market? Well, it was one of the factors that affected it. But here's the thing: is that happening? If that's why you're concentrating, you see the market is coming down. To me, these interest rates, going up, I'm seeing multiple opportunities. One, all of a sudden there's inventory. Okay, now we have properties to choose from. Two, now I have time to do my due diligence. Make sure there's positive cash flow, and then apply and make it work with the existing interest rates. On top of that, what's interesting is this. Yes, the interest went up. Yes, there's going to be some people that are going to be affected by it. That bought pre-construction, that may be not able to close because under the new rules they may not be able to qualify.
Yeah, and a lot of times it's the people. Like, one of the things in life that is a lot of people don't like to talk about, but it's kind of luck of the draw, right? Luck does play a small part in it, but the reality is if you do it long enough, you'll overcome anything at all and you'll create your own luck.
Absolutely.
There are some people that have bought recently at the top of the market. Most times it's based on speculation.
Absolutely.
If you're buying a home to live in for your family, there's never a wrong time. Never. Right? Because at the end of the day, shelter.
As long as you bought it is in your own budget.
Well, and that's a given. Like, Canada is very conservative. So if you bought a home, it was in your budget, right? One way or the other, it's in your budget for you to be able to manage. If you decide to overextend yourself, going around the rules or whatever it is, that's a different point altogether. But majority of people do follow the rules and live within the rules.
I think you're right in the sense that, especially when you're buying existing properties and its closing is in the next 2-3 months, you have no choice but to follow and to qualify. I think where the challenge we were running in is the pre-construction. Given where the market's been and that consumer confidence and the stories and everything else, there's been a lot of people that were buying an optimism. And they're thinking, well, you know what, I'll buy it, this is my piggy bank, I'll assign it before because I will make money. And the challenge becomes is that works when the market keeps on growing. Well, right now the market is not growing.
Well, when you talk about pre-construction, I've lost out with pre-construction because I don't have the appetite for it. I don't have the interest in it, I don't have the appetite for it, and it's because I decided a long time ago, I'll always be the turtle, not the rabbit, right? So you can run really quickly and jump and speculate on the market. Like, for me, even several years ago when it was only going up, and it had only gone up, and people made tons of money, that was never an area that I actually liked because I thought that anything is possible at any given time, and I just don't want to get caught in my pants down. So that's just
I like your analogy. And that was I'll never forget the day when we were selling a project, and I trained many different agents, and one of the agents came up to me and he goes, Oleg, how many units you sold? I said 5. He goes, 5? How can it be 5? I sold 12. And my question was, well, let me ask you, the 12 people that you sold it to, how many of them are buying it to live in and how many are buying to flip? He goes, well, I'm not sure. I said, well, that's a problem. So the challenge is the people that I sold it to, they're not buying it, on appreciation. They're buying it because they want to live in it, and even if the price drops or if anything happens, they have the ability to weather the storm. How many of you people can say the same? He goes, well, I don't know. So my question was, well, how are you going to look in their eyes if the market changes and they don't get appreciation, or they cannot do assignment, and they cannot close and they're losing their deposit, or they may be getting sued? I didn't think that way. And unfortunately, I think there's a lot of people buying and saying, well, I'll assign it, or maybe they were hoping that the future will look brighter. And the problem is you should always buy based on the current situation, is a safety in mind.
Yeah, and I don't want to make people wrong that have done that. Like I said, I'm the first to say, I've lost out on a lot of money by not actually, jumping the market. But as I said, I'm conservative by nature. If I can't do it right now and know it is a new cash flow and don't have to worry about it, then it's just not for me because I'm committed to being a turtle. But, for those people who, went big, made a lot of money, great. There are going to be those people, as you're mentioning right now, that got into it based on speculation, are not prepared for it, and now they can't afford to close. And if the market goes down and people are not willing to buy it from them, then they may have a challenge. But this is where I think there will be an opportunity where you're going to have investors that are going to come in and say, okay, you know what? Great, you put your money in for 2 years, now you can't close, I'll buy it from you for the same price you paid for it, if they're a good investor, or, like I say, a good-hearted investor. If they're, aggressive, they may say, you know what, I'll eat your down payment just so that you don't get sued, right? They'll eat into your down payment to get an even better deal, just so you don't get sued. And, you're gonna see a lot of things happen, but I still always go back to the reality that we still have a shortfall of properties.
Absolutely.
And yes, we can have a market crash. Everything can go down regardless of the fact that the need is there because it's based on emotion, but that emotion will only be short-lived. Usually, stuff happens in the moment. People are going to be like, okay, things are bad right now. It's going to sit for a little bit of time, and then people are going to be like, okay, I got to do something. I got to keep going again. I got to, continue living. I'm not dead. I'm going to keep going. And the market will continue, it'll rebound.
So I guess the question is, do you, run after the curve, or do you buy at a time when there's choices and options? I think for me, like yourself, what I'm hearing from you is that, times of difficulty is not a bad time. It's a time to evaluate and time to look for opportunities. Is that correct?
Absolutely.
You know what, and that's sort of my thought, the people made good money during the boom. But what's interesting is this, there's even more money to be made during the slump.
The bust, yeah.
And the bust. We are not in a bust, but we are in a slump, right? And that's one of the things that, we were discussing at training, is that the cycle of, slump, recovery, and then basically the boom. Well, the question is, right, we just went through the boom, we are now in the middle of a slump, and that seems to be going across the whole part of Canada unanimously. So, but that creates a lot of interesting opportunities. So maybe, there's two parts. When we're talking about investment, it's not just about saying, okay, well, we're going to invest and we're going to, look for economics, but also it's what strategies we choose, right? Because I think the idea is this, besides of looking at economic conditions, we have to look at how can we further that by what strategies we employ. Are we going to do basically buy and flip? Well, maybe right now is not the best time, right? It can still be done. If I take the lowest possible value, that from a safety perspective, and I work backwards, then I'll know exactly what I have to buy the property for in order to get my desired profit. But it's a much tougher and a much riskier venture. But can we buy for, knowing that the rents are going up, could we buy properties that we can actually improve and add the rental units where it's certainty that we're going to have the tenants and we know what the rents are today, that's going to yield a 10-12% return, per year before appreciation, after management and all expenses. Now, I don't know, what are your thoughts? 8-12% return, is that a bad return?
8-12% return is an amazing return as far as I'm concerned. As I think I mentioned earlier, my biggest regret is selling properties. I've done very well, buying, fixing it up, selling, and make good money, but I'd have been so much better if I actually bought, fixed it up, rent it out, just refinance and take the money out, and not sell the property. But it's one of those things you kind of have to learn, right? So I would say that right now there are opportunities because a lot of properties are cash flowing again.
Mm-hmm.
like I think what a lot of people forgot is that in the extremes, it's very challenging to do anything. So when the market was crazy and people are buying above asking all these different things, like you and I've had these conversations. I say like, it's not the time that I look on anything because it doesn't make any sense.
The thing is, what we have to make a point of is that it wasn't about the fact that people were buying over asking, because unfortunately there was that trend of taking a house that was $1 million, pricing it at 600 and saying, oh, I sold it over asking.
Yeah.
Well, if you sold it at $1 million or $1,020,000, big deal, right? But it's when you took the house that was worth $1 million on the market and you because of the competition, you push the price by 200 or 250,000. That's where it became an issue, because one, from the appraisal perspective, you have now you own a property that is not worth as much as truly is compared to the neighborhood. And on top of that, I guess now the question is, from an investment perspective, well, as investors, we pay based on returns. Well, if you bought it based on emotion, the returns are not there.
Right.
And that's one recipe for getting yourself into trouble.
Big time.
Yeah.
At the end of the day, the number one thing I've learned over time is simple. Just do your homework, right? Make sure that you're buying for the right reasons, and just buy when you can. Because tomorrow is never promised. You're not guaranteed that you're going to be able to qualify. If you can qualify today, buy today. Don't wait until tomorrow expecting that you're going to time the market, you're going to get a better price. Because, we saw, like, when interest rates were low, people were telling me, oh, I want to actually buy when prices go down because they're expecting price to go down. We see that prices are going down right now. But what I told those people then is, buy now, don't wait. The reason is, it's cheaper to buy with a low interest rate and a high price than it is to buy at a high
Interest rate
and a lower
Yeah.
price, which we're seeing right now. But when you're in a situation right now where the prices are low and interest rates are high, you still have to think about where you're going to be in the next 20 years.
No, in all fairness, you have to think about it. If you look historically, the interest rates are high for what you're used to in the last 3-4 years.
And that's a good point.
Technically, I remember when my interest rates dropped to 8%, and I couldn't believe it, because historically, I've been in the industry at that point by, I think, about 10 years in real estate, and I'm going like, wow, I haven't seen rates this low in my life.
Yes.
You were jumping for joy. So let's put it in perspective.
And that's
8% versus what is it now?
And you see, and that's the thing about it. Like I know the point that you're making. The challenge is that most people can only see to the extent of their closest recollection.
Right.
And it is higher for a lot of people than it was recently, right? We did some numbers and, we see that it went up like about $30 per 100,000 in a short period of time, but all this stuff is really relevant. What is relevant is that people still have the ability to qualify, maybe for less of a home,
Right.
but you buy what you can buy when you can, live within your means. I remember the good old days when people used to come and say, okay, and I'm being facetious because a lot of people still do, but they'll come to you and they say, okay, what can I afford? And you're like, this is what I can afford, and then okay, they buy what they can afford. Now I find a lot of people want to buy something that's a lot more, and I'm like, you just can't afford it. And like, people get upset when you say that to them, but the reality is that this is what you can afford.
Well, I think, one thing that's talks to the matter of how our mindsets and our expectations have changed over the years, where, let's say, if you look at our parents who live, within their means, and they work hard, but they were conservative. Looking at ourselves, we probably were a little bit more aggressive, and we tried to reach for higher heights, but still we worked hard, and we didn't take, for what it sounds like, yourself, you played more of a safety game. I know myself as the same. I believe that I prefer to manage my risks and maximize my returns. If I do that, I know that is there a possibility of loss? Yes, but it's manageable. And over the years, that proven to be. I've looked at all our investments have paid off. Right now, I look at it this way: that, you know, in real estate, will you have ups and downs? Absolutely. But one thing is, if you have, that's true in real estate, is that if you have the ability to weather the storm, if you wait long enough, the value will catch up and then surpass whatever you paid.
And if you're smart getting into it, you'll make sure that either it fits your needs or it cash flows, which from an investor standpoint, cash flows, and really it makes no difference what else is going on.
Absolutely.
Because as long as the property can carry itself and fulfill the needs you have right now, it should not be looked on as just an investment, something to speculate on. It should be something that you're looking at from a long-term perspective. And from a long-term perspective, I don't care what you buy, if you put a 20-year horizon on it, you're going to make money.
Absolutely.
Right, one way or the other. Either because you're going to be the person that is not investing your money and you're spending more than you should. I'm not saying that to judge, but that is a reality. And then you have a forced piggy bank. Or you're going to be the kind of person that's going to put it in, have the money, cash flow, make money on it, and have growth over time.
Mm-hmm.
Right? But one way or the other, you're always better having your money in real estate than most other things that you can have
Absolutely.
out there.
No, I look at it, you know, in terms, like I look at my RSP portfolio versus the real estate portfolios. You know, yes, we had some really good growth in my RSPs,
Mhm.
but I've seen 30% and 40% drops. I've seen my clients come back and also pull their money and come back into real estate simply because of, the losses they've incurred. Now, in real estate, were there some losses? Yes, but they were on paper. For most part, if you had the ability to weather the storm, and long term, it always came back, and long term, you always made money.
I look on it this, and not everyone agrees with me, but I mentioned before, I look on real estate like bonds, like investing in bonds. An investment, when you buy a bond, you know what the return is. The return is very, very minimal. A lot of people look on it and think, you know what, why am I going to do it when I can make so much money somewhere else?
Mm-hmm.
But when you go to the casino, or you put your money in a lot of securities, with the investment, the RSPs, the mutual funds, all the different channels that invest in stocks. It is a gamble because you can have a company that's doing phenomenal and that company drops in value, even although the company has great fundamentals and doing phenomenal. You could have a company that's doing horrible fundamentals, they're on the verge of bankruptcy, and the company stock is going through the roof. To me, that's gambling. Right? I'm not saying that, I'm not making someone wrong for doing that because, everything has patterns and stuff like that, so you can do it and make money, but I still look on it as it's gambling. If you buy something that is giving you a fixed return that you can count on, it's investing because you know what the return you're getting. You know what the projected return is for
Absolutely.
over a certain period of time. So it's the difference between speculating and investing.
And I think there's another thing to consider. One thing that real estate gives us, and that is, the interesting part is that idea of leverage. Because when you think about it, if I go into, put money into RSP, I have to put 100% of the money, and then I start earning interest on whatever I put in. In real estate, let's say the house is worth $500,000, I'm only putting 20%. So 100, so then what's interesting is this. Over the years, is being paid off by somebody, or even by myself.
I'm going to tweak what you're saying because you are right and you're wrong. The reality is that you can leverage stocks as well. You can have options, you can do all these different things. So it is possible for someone to have 100,000 and to buy more stocks with the money they have leverage as well, and you can make way more return. I would say the difference is that majority of people can actually get into leverage with real estate. Most people, you'd have to be a very sophisticated investor and qualified investor to be able to get leverage using stocks. So it's not possible.
When I say leverage in stocks, I think you're talking about buying like shorts and everything else, if I understand correctly. But I think when I'm talking about, if you come to the bank and you say, I'd like to invest money into stock market, how much will the bank lend you for that?
And that's what, and I said, I really like to be fair. it sounds great when people say it, but the reality is there are some clients that can walk into the bank and can get that leverage and can do it. But the bigger part, or the more important part to really focus on, is the fact that majority of people can walk into the bank and get that leverage that you speak
For the
about
house.
for the house.
Absolutely.
Whereas majority of people cannot walk into the bank and get that same leverage for stocks, right? So it creates a more level playing field, like it makes it easier for the average person, but it would be inaccurate to say that you can't have leverage both ways.
Well, I think, I guess in life, there's nothing that's 100% certain.
Right.
Right,
But
there's
the more
exceptions
important-
to everything.
But the more important part, I just wanted to touch on that part, is that when you leverage real estate, it's a lot easier. But the reason why it's a lot easier is because it has a tangible asset behind
Absolutely.
it. There's security behind it. So even when you make a mistake, you do have a contingency.
Well, I guess the way I look is like this. Can real estate go to zero?
Realistically, the answer is it would not over
We're
time.
talking about from period of over time.
Yeah.
Everything we're talking about is over time.
Yeah, for sure. And
You
it
know,
can.
I think, yes, it can, it can buy
And
something.
I will say that I'm a very logical person, which I know it makes it kind of hard sometimes.
I
to
guess
have
I better
conversation
be careful how I
because
phrase my questions.
I'm very literal, and I guess because of my line of work, the words make a difference, right? So I'm very literal in what I say to make sure my clients understand everything accurately, so there's no misconception or confusion. So that's why when you say the words, for me, I'm a stickler on making sure that I'm extremely accurate what I say and not misrepresent
I
something.
guess the analogy I wanted to make is when you buy a property, the market goes up, market goes down. If you look over the history of, even if I look over the last 30, 40 years or 50 years, the most we've seen is about a 25% drop in Canadian market, which was 1989. Before, we had some drops before that, but they never went to zero. They never went to 10%.
Yeah, you
Now,
have a
if you look at
tangible,
the-
you have a tangible asset.
Right.
It's hard for it to drop to zero.
And over time, it would always come back.
Yeah.
Now, when you deal with the companies, unfortunately, the company can be very successful, and due to factors, it can actually go to zero.
Yeah.
And there's some will come back over time, and others may never come back at all.
Correct.
And that's the biggest challenge. That that's where I think the real estate certainty comes in. That in businesses, I've built companies that were profitable, making good money, that was worth quite a bit, and then the next day, due to factors outside of our control, it went to basically -200.
To concrete the point that you're making, S&P 500 is the 500 most profitable companies in the United States. 10 years ago, half of those companies did not exist. 10 years from now, half of those companies are going to be out of business, right? And you can go back, 100 years, and it's always the same thing. A lot of those companies will go to business, they will change, they'll go under, they'll, whatever it is. Very few companies that were here 50 years ago are still here right now. Very few brands. So what you're saying is totally accurate, because companies come and go. That real estate that's there 100 years ago, if it got demolished, usually it's because something bigger is in its place. Very seldomly, it just got demolished and just,
And it's usually got demolished because somebody paid good money for it to get them.
Exactly. And even if you look on it, 20 years ago, the property was there, it got demolished. Now the land itself, without the house on it, is probably worth more than the house and property was worth 20 years ago.
Yeah.
So it just makes it, you have something tangible. So I totally agree with you.
So Ken, let me ask you this: like, based on what's happening today, from a point of the financing, as your experience in the mortgage industry, as well as an investor, what would be your advice to our listeners?
I thought you were going to ask me fixed or variable, because that's always the question that you hear from everybody.
Hey,
It's like,
you know what? I've been preaching. What do you call it? Basically variable for a very long time. At one point, I was preaching fixed. It seems like I look like a good guy right now, but you know what? I don't know. Right now, I would be leaning to variable again.
So, you know, the big thing I've always said, right, and not just times like this, it makes it a lot easier because you're getting more questions, more so than everyone, you know, knowing the answer. Because one of the challenges I would have as a professional is that I have a lot of people second guessing my advice because their friends, family, co-workers, everyone's telling them
Absolutely.
something different, right? And they're also telling them this is what they've done. A big thing that people always have to remember is a variable rate mortgage can fluctuate.
Absolutely.
So you have to make sure that you can weather that storm, right? It could be great, it could be in your favor, it could be against you. Traditionally, the variable have been better. But I wouldn't say that everyone should just take a variable just because. One of the things why I like the variable right now, and there have been a lot of times when I much prefer fixed. I'm a very conservative person by nature, so, you know, I like to just know what I have, get it, know that I can pay for it, and don't even worry about it.
See, and I tend to agree with you because, you know, having said that, you know, for most part, I stay with the fixed mortgages because exactly for that. I know that I'm committed for the next 3 or 5 years, and yes, I might be paying a bit more, but I got the peace of mind.
Yeah.
And I know that if there's any changes, I'm okay, right? So I think, you know, you hit on the right part. It has to be on the individual and their position.
Absolutely. But right now, the rest of what I was going to say is that right now, I actually prefer the variable rate, right? And it's not because, like, one, the fixed rate you're taking right now is a lot higher and you're locking it in for a longer period of time. Can rates go way higher? Absolutely. Is it probable? I would say it's not probable based on the fact that we actually have a real economy behind all the rates that the government have to make payments as well,
Mm-hmm.
right? Every individual, every business owner, everyone has to make payments as well. You go too high, too fast, you're going to crash the market. If you crash the market, you have to drop it back to try to cause the market to recover. So it's either you're going to crash the market, which means rates will come back down, or you're going to basically stop being reasonable to not crash the market, which means it's going to stay kind of stay where it is right
or
now.
be cut down.
And if you look on, usually when you take a variable, right? So we have lenders that are, you know, prime minus 25, which is 0.25 off a percent. You have some lenders that are 1% less. The variable actually give you, there's a lot of different options. So we have lenders that will actually have a very significant amount of the variable, of the prime rate, which makes the variable a lot more favorable. So I like the variable right now based on qualifying. It's a lot easier to qualify because if you come down to being able to buy or not being able to buy, I'll choose be able to buy.
Being able to buy.
Right?
Agreed.
If it comes down to getting the property and paying a much higher rate right now today, I would say that you have to really make sure that that's something that you're comfortable with locking that in for a short period of time. Some people say, well, I'll take a 1-year mortgage. The problem is that when that contract is up in 1 year, you now have to readdress it,
Right.
and you don't know where it's going to be. So I would prefer to take the variable rate mortgage because you do have the ability to lock it in. So if you take it and you know you say this is not for me, I don't want this anymore, you lock it in, and now you've already qualified for the property, so you now have the property, but you can lock it in to make sure that you don't have that fluctuation. But if you lock it in from day one, then you're locking in that rate for a while, and I do think that it's going to come down a little bit. Now, I don't think it's going to come down a lot, but I do think it's going to come down a little bit just to kind of, make it affordable. Because at the end of the day, the government has to keep the economy going.
That makes sense. I tend to agree with you. And I think that's the main message that you're actually hearing across the investment industry. So it's hopefully you enjoyed this conversation. Ken, I want to thank you for coming in. And I'd love to meet up with you and just talk more about opportunities and solutions from a financial perspective for our buyers, for new buyers or people that are looking to get into the market in today's time.
Absolutely, anytime.
Okay.
Thank you.